Welcome to the Deerwood Realty YouTube channel. I'm John Schink, founder and managing broker of Deerwood Realty in St. Louis, Missouri. Did you have a good Thanksgiving? I didn't get many videos out, but I wanted to go over this article I saw today to get back in the holiday spirit. Here it is. It's from CNN. It says, new home sales fell flat last month as mortgage rate hits 2023 high. Now look, for the longest time, people have talked about how great it is that the new home segment is doing so well. That means that the economy can't be doing terribly because new home sales are doing so great. And then after a while, people got kind of wise to it. They figured out that the builders were not cutting prices yet, but they were offering rate buy downs for the next 2 years, so that in theory, down the road, the home buyers could refinance. I always think there's times where it makes sense to buy a new construction, but I was a little suspect in the last, I'd say, couple months, because the prices were just ridiculously high for new construction. But I mean, that's been the way it is everywhere. So let's get into the article and see what this is about. So it says, new home sales in the United States fell in October as typical mortgage rates reached their highest levels this year. Sales of newly constructed homes fell 5.6% in October to a seasonally adjusted annual rate of $679,000 from a revised rate of $719,000 in September, according to a joint report from the U.S. Department of Housing and Urban Development and the Census Bureau. Sales were up 17.7% from a year ago. So look, even though the new construction home had fallen, they were still up from last year. It says this was below analysts' expectation of an annualized sales pace of 723,000. Look, it's not good, but I mean, it's not just awful. It says the constrained resale home market has continued to benefit the new home market because new homes are often the only option readily available as many owners continue to remain in place with their favorable interest rates. So the argument has been you can't go buy a used home because there aren't any available. So the only way to do it is to buy new. Now, the problem with buying new, from my perspective as a real estate agent, is, say you put down money to buy a house today, it's 6 months before that thing gets built, if you're lucky, and it could be longer. Can the market change dramatically in 6 months? Well, I think it can. I think the market can change, almost overnight. It doesn't happen very often, but I've always been concerned with the people that I help with new construction. It's like, this is the price now, but we have no idea 6 months from now if this is going to make any sense. So that is something that's always bothered me. And then it says, new home builders often offer more financing options for home buyers, she said, and are able to buy down mortgage rates to make their offerings more attractive than the resale market. And that's what I was talking about earlier. So they've been buying down rates. It says to buy down the mortgage rate, the home builder can subsidize a portion of the interest rate for a specified period, usually 1 or 2 years, making it more affordable for home buyers in the near term. In the event, that's very important, in the event that the rates are lower a couple of years from now, the homeowner can refinance into a loan with a lower monthly payments for the life of the loan if the house appraises. If it does not, now you get to bring money to the table, and you're already paying a tremendous amount of money in this market. I don't know. As far as offering, more financing options, sure. But see, what we had with the new home builders, we've had everybody, like all the national home builders, saying how they're just managing to really do well in the face of adversity because they're offering these rate buy downs. Now, what happens when the pace slows? What happens when just offering these buy downs isn't enough? Then are we finally going to see the drop in prices that there should be? There absolutely should be. It says, with mortgage rates anticipated to drop in the coming year, more resale homes may go on the market. However, there remains a significant pent-up demand from buyers. Okay, so mortgage rates have anticipated, in theory, you don't really want to enjoy mortgage rates going down because that means that the economy is not doing so hot. So that's always been my kind of concern there. It says we have underbuilt homes compared to household growth for more than the past decade, and this mismatch has allowed pricing in many metro areas to continue to rise as households compete for the limited number of available homes. That is one way to look at the situation. I would say that the inflation caused by the printing press of the federal government has caused house prices to become unattainable, as well as anything that's like financed. Anything that takes cheap money. So you see a tremendous amount of investment in real estate, but you also see the effects of inflation in the asking prices of the homes. Same thing with automobiles. I mean, who would believe the prices that people pay for cars now? I mean, even used, it's just unbelievable. Can this continue? As long as wage growth continues to climb, that's fine, but I haven't seen anything that's really compelling for wage growth increasing. So people are getting massively squeezed. But anyway, I wanted to go over that article with you. What do you think? Do you think this is the start of the fall of home prices? I mean, you've got more leases available of single-family homes than you've had for quite some time. You've got, pretty much a stuck used house market, and now you've got lower prices, or you're going to have lower prices if this continues in the new home segment. So I don't know. I thought it was an interesting article. Wanted to bring it to your attention. Put something in the comments. Let's chat. Have a good Monday. Thanks for watching. I'll see you tomorrow.